Okay, good evening, everybody. Today is Friday, December 22nd, 2023. Time flies. This will be your weekly take on the market. I will be your host. My name is Scott St. Clair. I am the manager of the Premium Product Group here at Investors Business Daily. Please take a moment to read the disclaimer. I'm not licensed. Can't tell you what to buy, what to hold, what to sell, how many shares to own, whether you should hedge, any of that. I do have skin in the game, which is nice. We definitely most enjoy being part of participating in the markets, but we're not licensed. So this video is for educational purposes only. Market thoughts, industry groups, stocks to watch, quote of the week. You know the drill. So let's get started. So Ned Davis Research up their exposure to the maximum. The max they'll go is 70%, but I thought that was interesting that they are at max. This is a tweet from Michael Santoli, and I only caught a little bit of it, but it looks like, and this is Ned Davis Research is a quality firm. They had a book called Being Right or Making Money, which I liked. I liked that. I liked that book, and they've been around for a long time, for whatever that's worth. But I feel like in the tweet he did say that they were, underweight stocks in the bear market and slightly overweight this year. So it seems like they've kind of been in sync with the market the last handful of years. I thought this was interesting that they are going to maximum exposure. I love this. I think if we fast forward 5-10 years, I'm dying to know how this plays out. But you've got the Mag 7 are larger than all the stock markets of the UK, China, France, and Japan combined. So you can either own the Mag 7 or you can own those 4 countries' stock markets. I don't know. I guess, now there's a reason they're larger because there's the quality in the Mag 7 is undeniable, but there's got to be an economies of scale. And I've thought that for a while and I've been wrong. Especially in like Apple, I think there's economies of scale there for sure, but we'll see how it plays out. But this is a very interesting chart. Inflows into equities, price follows or sentiment follows the price. So as the market goes up, people become more and more bullish. If the market were to go down, they become more and more bearish. And B of A Global Research equity flows largest 8-week inflow to equity since March 2022. I like this chart as well from Sentiment Trader. Trump used to tweet about stock market on average, like once a day on average, because he'd probably do 2 or 3 some days. But Joe Biden and his team, they do not tweet about the market that often. But when they do, it's been a pretty good signal. So stock market has gone to up exponentially since I've been president, right into correction. And then when the stock market made a record high, stock market has hit record after record on my watch. That was right before one of the nastiest bear markets in a long time. It wasn't that nasty on the indexes, but it sure got all the stocks. So, like the Twilios and Datadogs and Shopify's of the world all went down, 70%. ARK Invest probably went down 80% from high to low, stuff like that. We were really, really aware of the stock market slide right near the lows. And recently, stock market is higher than it's ever been. So food for thought. That would put, if I had a kind of a, I don't know what you'd call it, like a basket of indicators, and things that are bullish would be a plus and things that are bearish would be a minus. This would be a minus. This would be like a reduced exposure type thing. When they're celebrating something, it tends to be too obvious. But we'll see how it plays out. Okay, so let's go to the indexes first. So here is a chart. I do not want to pause. I don't want to mess this up. Why is it saying your screen sharing is paused? Please share. That's so strange. All right. Sorry. I'm going to do resume share. That was weird. It wouldn't allow me to do that. Here's the NASDAQ. And a few days ago, you had kind of a weird day. There's talk of China, Taiwan tensions was the reason, or some kind of large put buyer that caused this. Who knows? It's impossible to know truly, but you need days like this. Actually, like encouraged that you get a day like this. It closed right in the low, and there's zero follow through. Stocks, up all day yesterday, and then up a tiny bit today, but no follow through the downside. So we're getting, we got one more week of trading. I just don't think that much can happen, but it'll be a light volume week. So it's possible you could get, like something unusual happen. It's unlikely, but it's not impossible. But like an unusually big action down or unusually large action up because of the light hands on the street and the less volume that it will occur. But other than that, I mean, the market's at highs, and I'm really trying to get to the new year because I'm dying to see how January plays out. But 1, 2, 3, 4, 5, 6, 7, what's that up? 9 weeks in a row. Very, very unusual. 1, 2, 3, 4, 5, 6, 7, 8, 9. Last time we did that was after the what did they call that? The Christmas Eve massacre was somewhere in here. Yeah, in December 2018. Even the COVID move, you had some down weeks, a couple of down weeks in there. So a pretty powerful action to see how that plays out. The S&P looks very similar. The Dow is at all-time highs, and it's not that it's that much stronger than the others. It's that this peak wasn't all that exciting when this rally was occurring. The S&P and NASDAQ moved much further than the Dow, as you can tell by the relative strength. Look at the relative strength line. Look how in 2018 it was here, and in the COVID market it was here. You know, try to go up, but it's basically here, so it's not all that exciting. The Russell, I think it was Randy Watts was on the podcast with the Russian Justin, and he said something about the quickest move from 52-week lows to 52-week highs in the Russell's history. So breaking records on the way up. Interesting how fast that changed. So my instinct is that's pretty bullish, but the problem with this index is like every time it breaks out, I don't want to say every time. This one was fine, but you can see it's mostly breakouts are a bit of a dud for this index. So I don't know. Let's see. And then I guess we can discuss some ETFs. So like not Malaysia, but is it the Mexico one? I just did that again, didn't I? EWM. What is the Mexican one? EWF? It's like a weird ticker. EWW or something. There it is. Yeah, EWW. So this has been a good one, and very esoteric, but Poland has been really good. I finally moved on from it, but it's really good for an ETF for me anyways. EWZ looks very interesting to me. This was from a 75-cent dividend, so 34.62 plus 75 cents puts you at around 35.37. So it's really, once you get the dividend, really right about up here, and it's coming out of a pretty good base, 16 weeks. We'll see. This is very IWM-ish, right? Breaks out, nothing, breaks out, nothing, breaks out, nothing. So, and gosh, when this is why I'm tempted by it, because I was there in this 03 to 07 period where these types of stocks and in this ETF did extremely well. And it hasn't made a new high since, 2008. What's that? 14, 15 years, 15 years of nothing. It's pretty incredible how strong the US market has been compared to all other markets. Just so amazingly strong comparatively. Okay, so let's jump to the industry groups. Computer software financial is number 1. Energy coal is number 2. Consumer services education 3. Software education media 4. Interesting. Banks West Southwest. That's very interesting. So let's pull that one up. I'm curious what's in there. East West Bancorp, Western Alliance, top stocks. I've never even heard of FinWise. Preferred Bank LA. Wow. East West. So this is new to me. So this is now I'm on a monthly chart, but very interesting. Now these are really, really small, but Western Alliance, Cade, Bank of Hawaii. Cade was a very good breakout. Bank of Hawaii, NRIM. I've never heard of that one. And last but not least, CWBC. So as you can obviously tell, totally whiffed on this group, just not on my radar at all, but very interesting. And that's because probably the rate move has been so good. Retail apparel, shoe, computer software, securities, very good group. CrowdStrike's been an incredible leader. Household furniture, software database, and look at all the banks that are really moving up. Interesting. I need to do some work in this. It looks like I've missed the trade. Never been a big bank trade guy, but who knows? I probably need to dig in here because those banks, super regional, at least get to know that a little bit. And then finance, savings, and loans doesn't mean I might buy those, but I need to get to know that area a little bit better. So that's the advantage of looking at the industry groups every week. And I have to admit, I haven't looked at them for the last couple of weeks. I've been lazy. I've missed that. Get back on the bike. Okay, stocks. Let's start with all the usual suspects. So Nvidia, it's fine. Try to hit 500, pulled back a little bit. I just don't think there's anything to read in here, bearish or bullish. If you own it, you just leave it. See how the new year plays out. But obviously one of the great leading stocks. Tesla. And Tesla's very interesting to me. You've got this this is the double bottom. And this might be that nighttime bug because it is nighttime where the patterns turn off. This is a good example of that. Bear with me here while I screenshot the bug and then troubleshoot it. Okay, thank you. All right. I think the not the pattern break, technical. So I think for this to get going, the relative strength really needs to improve. 3-month RS is 52, 6-month is 46. It looks fine on the chart, but as the market's gone up, this has gone up a lot less than the market. And you can see the relative strength, another peak, 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 peak. It's just continuously making a lower highs in relative strength. So let's see. Now, my feeling on Tesla is it's probably a buy at 275 and a sell at 225. Really needs to get out of this range. And like, if you force me to put a trade on, I would say, well, I'd buy it above 275 and sell it below 235 or something like that. Maybe even lower at 230. I'd want maybe a little bit more weakness. Amazon is hanging in there just fine. Apple, a little bit of, the relative strength isn't all that great. 81. Let's open this up again. You can see, look at the 3-month RS, pretty poor. 6-month RS is poor as well. So definitely a laggard in the Mag 7 group. Meta is probably the best one. Meta, look at that, making new highs, very, very close to all-time highs. Sometimes I wonder, it's like, I know it's not easy, but gosh, when there's a quality company just getting thrown away, it's below so many of the moving averages. I don't know how you'd buy that, but here, that's the buy, unfortunately. Microsoft, last but not least, very good one as well. All right, and then I was doing some work for the model book stocks, and Micron was in there, and I came across some old William O'Neill stuff where they had a list called New Stock Market Ideas. They call it News Me as a acronym, and it was basically their institutional buy list, because I was looking for some old stocks for the social media account to tweet the model books where I could find the price action as well as the fundamentals, because we only have the fundamentals in history in in these books that I have. So I found it interesting that the William O'Neill Institutional Service put Micron, and this is kind of going off the tangent here, but in June of 2000, right there, they added it to the New Stock Market Ideas list as a buy. And this is right near the top of the market, but there's no way they could know that, right? It went up pretty good, not a lot, but maybe enough for me to make money. But then it just collapsed, and they removed it. And so they when they add something, they have a sell strategy. They have a plan. They remove it, and they call it removed or an avoid. Is what they would do. So they were, buying MU right there coming out of that base, and Teradyne, almost the same exact time frame. June, right there, coming out of that huge cup like that. So if you get it wrong, you buy something that you think's going higher, and you get it wrong, you have a plan to get out. And in this case, it saved them tremendously in just these two names. I'm sure the book was littered with names, but I found it interesting to see those two names. What else is going on out there? Let me reset to today. AMR is, gosh, what a beast. I'm no longer in this one, unfortunately, but it's just really, really strong stock. What else is out there that the shippers are very interesting. Now, the shippers are a little bit, there's some news, obviously, in the Red Sea that's going to influence these, but TNK looks good. I do own this one. Sting looks good. I do own that one. And I was even in the junk pile a little bit on Zim. I do own that one, although it's lower priced, and I don't have quite the position that I normally would for something because of the quality of it. But this was such a good one here. I couldn't help myself when I saw it starting to turn back up here a little bit. So shipping is holding up well. NVO, really tough stock. It might just need a lot of time, not really doing much. And Lilly, not really doing much either. You can see the relative strength is really sliding. There's a new ETF, which is very interesting to me. Marcus Smith team tweeted about it a few days ago. I think Harold found it, and you can see I set an alert on it, a couple high and low, and called Hearts, and it's got NVO and Lilly and Vertex, I believe, is in there. I don't know what else is in there maybe one of these potential buyout stocks was in there, and that's why it had such a good day. But this is very interesting new ETF if you're interested in that area. Oh, and Vertex. Vertex, very interesting. I love the price action on the stock. The fundamentals aren't all that exciting, but looks if they have a new drug that's supposed to be a potential opioid replacement, that just seems like a game changer. And so the story is appealing for this one. What else is out there that I know that I mentioned MBI a couple of weeks ago, the whole dividend thing, the story, the Jesse Livermore story. I still have this. I think the dividend is, well, I think ex-dividend or whatever you want to call it is Tuesday. I don't think that you'll get paid the dividend until maybe Friday, but so it's an $8 dividend, and the stock is going to adjust $8, give or take. There's no free lunch on Wall Street. But my hope is that it doesn't adjust, maybe adjust 7.5 or 7.75. So I would be able to capture, the 12 to 14 move, and maybe a little bit more with the dividend. But I still own this and have a pretty good size position in this one. Look, when you announce a dividend, a special dividend, that's a signal to the market about your business. I mean, if you were on the board, if you were the CEO of MBI, it just seems unlikely if you didn't like the prospects for your business going forward, you'd issue an $8 dividend when your stock was 7.5. The stock was 7.5, and they announced an $8 dividend. I can't recall I've ever seen something like that. It's probably happened, I'm sure, but it seemed highly unusual, and reminded me of the Union Pacific, where they declared in the reminiscences of a stock operator, it was a 10% dividend, and Livermore was short the stock. They announced the dividend. He not only covered the stock, but he went long the next morning with the stock gapping up, and was able to capture, make up his loss and then some. And that's kind of what's happened so far. 12 to 14. I guess that's a pretty good move. I haven't really done the math. It's 16%. So we'll see how that plays out next week. But there's, I know there's no way around it. You're either going to own the stock and sell it, or you're going to, if you own it for the dividend, it's going to gap down. If there was another way to avoid all that, I promise you, Goldman Sachs of the world they would find a way. But maybe it just keeps trending once the gaps down and then continues to trend. Anything's possible. I think that's all for the stocks that I wanted to cover. I guess there's, SMCI is really difficult, very tough stock. It's just really choppy. Very, very, I know it's on a lot of people's radar, but just very hard to own. It's just the action in it is pretty tough. Okay. So, okay. Yeah, I forgot about this. So somebody was asking me in an email about, last in, first out, taxes, etc. Very, very detailed question, and it just was not a question that I wanted to answer via email. One, from a compliance standpoint, there are some parts that I'm not allowed to say, and two, it just would have been a very long email. So this is how I traded VRT this year, actually, up until the earnings gap. And then I did trade it more often after that, a few times again, but this gives you an idea of how, and this is like a very well handled trade for me. This is one of the best trades of the year for me. I kind of handle it very well. So keep that in mind. They're not all this good, believe me. But on June 5th, I initiate my position at 1998. It's usually around 10%. That's what my position will start out. Why? Well, the stock gapped up on earnings and couldn't pull back. So, I'm not going to buy the earnings gap. I'm not very good at that, But if it gaps up and can hold a day or two or three or four, it's a really powerful action to me, and I will buy like that. I love to add to them immediately, and I don't wait for 2.5%. Good or bad, I just want to get more money into it. And now I might only put go from 10% to a 12% position, but 1998 minus 2031 divided by is 33 cents. So it's about 1.6%. So on June 6th, I'll add and take it from, let's say, 10 to 12%. On June 8th, I'll add and take it from 12 to 14%. On June 9th, I'll add and take it from 14 to 17%, plus the accumulation of a little bit of gains. I'm not up that much, but let's say $1.10 on the initial position is a 5.5% gain. So I'm probably at like a 17% position, and then I'll leave it. And if it goes up a little bit, 18, 24%, I don't have any kind of rule. It's a little bit of seat of the pants, unfortunately, but I will take some off and allow the rest to run. Now, what you might want to do is like a first in, first out approach. So let's say I buy 1,000 at 10, 500 at 11, 500 at 12, 500 at 13, and I want to sell some at 14, I should sell the 13 stock. Now, in a non-taxable account, you don't have to worry about any of that. But if you're in a taxable account, what Bill would do is that he would keep the low-cost stock, and if he was going to sell, he would sell the highest price stock. Might even take a loss. Let's say I buy some at 16, it pulls back to 15, I might sell the 16 stock. So I don't do that even for my margin accounts, my taxable accounts, because I almost always, at least now, I never hold anything long enough to create a long-term capital gain. So it doesn't seem worthwhile to go through all that trouble. But that's how you could do it if you wanted. So when I sell I sell a quarter of my position at 2403. What you probably are doing, if you want to do it that way, is you're selling the 2110 stock, and then you're selling, let's say, half of the 2060 stock that you bought, if that makes sense. A number of days later, it's just not pulling back, and I decide to add again and take it back to a 15% position, I believe, something like that. Now the earnings are in the morning the next day. So how do I handle earnings? I have a cushion on this stock, but that doesn't mean anything to me. I handle earnings if I have a cushion in my account. So this was in June, July of this year. I was already up for the year pretty well, and so I could afford to risk the earnings. If it was January 2, and I was flat for the year, I would not take this ad at the day before the earnings. I would just not do that. I might even take some more off of the stock that I own. So it all depends on what type of cushion I have in the account. I would even initiate VRT at that 2642 if I didn't own it, because that looks like a stock that just doesn't want to go down. It's turning up. It's not a great buy point, but it's an aggressive buy point that I'd be willing to take if I was having a good year. The next day, stock gaps up, and I didn't want to close it all out, but just sometimes the dollar signs, the numbers, I'll sell a little bit. I sell a little bit, and then it goes higher. I sell a little bit more, and it goes higher, and then I just sell it all in like an instant of weakness. And I actually bought this stock back a handful of days later, because I would rather maybe not sell all of it, but I'm trying to get better at that. But so this is kind of how you would pyramid into a stock, good, bad, or indifferent. Hopefully that helps, especially the person who asked me about that. Now, most brokers, I believe, you can code your account for last in, first out, or first in, first out. I think the default is is LIFO, last in, first out. I'm pretty certain that's the way it's defaulted. But like I said, I don't really worry about that much because of the way, it's not an issue for me from a taxable standpoint. And in a non-taxable account, you don't even have to worry about all that. All right, so let's jump to the quote of the week. It's from George Soros. Somebody tweeted a passage from a book from George Soros. Now, I know George Soros can be a bit controversial now with the politics part, but this is George Soros, the trader. So bear with me. Let's separate the two. I think it might have been Mark Minervini, in fact, too. It was a video of Charlie Rose. I love the quote. The reason we have such a good record is because we never lose our principle. So he only gets aggressive when he's up. Case in point, VRT. I'm having a good year. I'm up for the year. I can be aggressive into earnings, try to build on the gains. I'm risking old profits to make new profits. When you're losing money, it's harder to make money, for sure. It's really difficult. When you're swimming upstream, the market is very cyclical and wavy, and it's like a baseball player. When you're going good, every ball seems to land in play, land in front of the fielder, run under the guy's glove, just go out just outside his reach. And when you're going bad, they seem to catch everything. And so when when you're losing money, you want to pull back, you want to retrench. When you're making money, you can press, you can go hard. I love that quote. Build on the gains, risk old profits to make new profits. Try not to go backwards. Okay. Thank you, guys. Contact information, marketsmith@investors.com, 800-424-9033. This will more than likely be the last video of the year, unless something drastic happens on Friday. I'm going out of town for New Year's. So I don't plan on doing a video on Friday unless something really, really drastic happens. So it's been a pleasure. Hopefully everyone had a great year. It's been a really good year in the market, but really tough. This is going to be one of these years where I do my post analysis, and I just feel like I'm going to be like, gosh, I should have made a bloody fortune. But sometimes I feel like that every year. There was some stuff that I just didn't handle as well as I would have liked. So, but live and learn. I'll try to get better. And the nice thing is 2024. Start from scratch. I don't care how bad you did, how good you did, how whatever you did last year, it doesn't matter anymore. You get a brand new slate. And even when I do, I like that. I like starting over from scratch. Have a great weekend and a great year. Have great holidays, everybody, and we will talk to you next year. Bye-bye.